Welcome to my accounting classroom. I'm Sid Bundy, and today we'll be talking about management assertions. Financial statement assertions are implicit or explicit claims that management is making to financial statement users. For example, by including an amount for cash on the balance sheet, management is declaring that they have that total amount of cash as of the balance sheet date, and that the cash amount exists, they own it, and that's the appropriate value as of the balance sheet date. The audit is designed to collect sufficient and appropriate evidence to reach an opinion about whether or not the evidence supports or refutes the assertions. And assertions are the responsibility of management. Audit's assessment of risk related to assertions is what drives the overall audit strategy and individual procedures within the audit plan. There are essentially two places within the statements of auditing standards that provide guidance on assertions. First is SAS 31 or 80 and SAS 106. SAS 31 or 80 defines 5 assertions. You need to memorize these assertions. In this class, I'll try to consistently use the mnemonic perceive. In the past, I used cover you though, like Becker. But that memory tool is less related to the standards. I apologize if old materials make it into your course, but assertions are such a cornerstone of the audit that they seem to pop up in every single discussion and document, and it's a hard habit to break. To help you remember perceive, we'll think about rainbows and how we perceive white light as a refracted rainbow of colors. Let me insert a bit of trivia here. Do you know how a rainbow is made? It's based on the relative angle between you, a water droplet, and the sun. A rainbow only exists if you perceive it at the right angle. And that right angle is 42 degrees. It just so happens that 42 is also the answer to the ultimate question of life, the universe, and everything. But I digress. Let's talk about rainbow colors now, and we'll save tasting the rainbow for the third lesson. P stands for presentation and disclosure. This is sometimes referred to as classification and understandability. The blue P means that all important information is included or disclosed and is presented in a way that is easy to understand. E stands for existence or occurrence. There is an or in that star. We say that account balances exist, but transactions occurred. Financial statements are only fair and accurate if the information is not a complete fabrication. R is for rights and obligations. The company claims it holds the rights to its assets and equity and is obligated by its liabilities. C is for completeness. The company is implicitly stating that they have included all pertinent amounts and transactions in their story. They're telling the whole story. It's the truth, the whole truth. And finally, V. V is for valuation and allocation. Sometimes this is as simple as getting the math correct. Other times we're talking about the correct application of specific accounting standards and subjective estimates. SAS 106 is generally a restatement of the same SAS 80 assertions with an added emphasis on classification. This standard classifies our rainbow of assertions according to the type of information auditors are examining. For example, rights and obligations is generally applied to account balances like assets and liabilities, not to transactions. Note that SAS 106 also adds specific language to several assertions. Let's just take valuation. Valuation is called accuracy when we look at transactions, and valuation and allocation when we look at account balances. And then valuation and accuracy not allocation, in the presentation and disclosure column. The standard also adds the required cutoff testing for transactions. You will need to take your time and study the patterns in these classifications. On the CPA exam, you'll very likely be asked to design or select audit procedures given information about either a balance or a transaction. You'll want to be able to clearly state the assertion and explain its connection to every procedure you select. Here's a template for making that leap using SAS 106. Don't worry, you'll have the opportunity to practice writing an audit plan during your duo missions. The basic template that I'd like for you to practice using when you design an audit procedure or test follows. It is a single statement with 5 blanks. Think about it as one of those keyhole thesis statements that your 7th grade English teacher forced you to use. Ready for the magic? Here you go. To test blank for blank, I will blank a blank sample of blank. Let's say that again. To test blank for blank, I will blank a blank sample of blank. No good, one more time. To test blank for blank, I will blank a blank sample of blank. Here's an example. I might determine that my client is at risk of either earnings smoothing or trying to reduce tax liability by delaying the booking of sales. So I decide to test accounts receivable for completeness. And this would be my statement. To test AR for completeness, I will trace a block sample of cash receipts. From there, I'll go on and fill in the details of specific steps and so forth. My audit plan template starts by naming the account balance or transaction that was provided by management and the specific SAS 106 assertion that was identified as at risk. We link the assertion to the testing and procedures based on our risk assessment and audit strategy. For completeness of the accounts receivable in the previous example, the risk was that the account balance was understated. I select a procedure that will help me test completeness: tracing. And we'll stop there. We'll address the population, sample size, and sampling method in a future lesson. To reiterate, the 5 blanks are: number 1, the name of the account balance or transaction; number 2, the name of the SAS 106 assertion; number 3, the name of the audit procedure or test; number 4, to identify the sample size and sample technique; and number 5, the name of the population from the client's accounting records or source document. Completeness is not the only assertion related to accounts receivable. Accounts receivable is an asset account balance. That means my audit program should include tests related to existence, rights, completeness, and valuation and allocation. Mostly, when you think about an asset account, you worry about overstatements. One might argue that more assets are better, unless you want a lean supply chain or fast turnover of receivables, or a strong ROA, that is. But still, mostly the risk is that accounts receivable values would be too high. My main substantive test for this might be vouching. Vouching is a powerful tool to test for overstatements. I can check a lot of boxes with that test. While I'm at it, I might do some recalculation within the same sample to gather evidence of valuation by doing some recalculation, just checking the math. I might even add positive confirmations on customer accounts over a certain dollar threshold. In your first squad mission, you'll work with a data set to see how audit software can help you with the analysis and testing of accounts receivable. But you still need to use your brain during the audit design. Spend the time this week to commit those SAS 80 assertions and SAS 106 classifications to long-term memory. I recommend rewarding yourself with Skittles on this one, but you can do whatever works for you. Be sure to access the rest of our map materials posted in the class site. Until next time, class dismissed.